Let's move to Section 4, Private Company Registration Process. So now that the why is firmly established, let's see how this builds and shift into the exact how of the setup process.
Here is your simple step-by-step sequence for registering a private company with the Ministry of Corporate Affairs, or the MCA. First, Step 1, you've got to obtain a digital signature certificate, a DSC, and a director identification number, a DIN, for the directors. Then, Step 2, you apply for name approval. This ensures your brilliant brand name is uniquely yours and not already taken. Step 3, you draft the foundational documents, the MOA and the OA. Think of these as the constitution and the rulebook of your company. Next, Step 4, you submit all these documents in one master application to the MCA. And finally, Step 5, the government issues your official certificate of incorporation and your company's very own separate PAN card.
Now, keep in mind, getting that certificate isn't the finish line, it's really the starting line. Here's your immediate, simple checklist for what happens post-registration. First and foremost, you absolutely must open a business current account. You literally cannot run a formal company through your personal savings account. After that, depending on your specific business, you'll apply for GST registration. Maybe you need an FSSAI license if you're in the food industry. You'll want to register your trademark to protect your brand or get an IEC code if you're planning to import or export goods. And because you're a formally registered company now, all these secondary steps, they become so much smoother.
Which brings us to Section 5, Costs and Annual Compliance. Let's get real for a second and look at the financial realities, the setup fees, and the ongoing responsibilities of actually running a private company.
Let's compare these side by side. Setting up a basic proprietorship or partnership is relatively cheap, usually somewhere around 2,000 to 5,000 rupees. Setting up a private company is a bit higher, typically between 8,000 to 10,000 rupees. But pay really close attention to the taxes here. While a proprietorship gives you a tax-free slab up to 5 lakhs, the rate scales up rapidly as you make more money. A standard partnership firm, that gets hit with a flat 30% tax right out of the gate. Ouch. However, a private company classified as a small company, which means your turnover is less than 4 crores, enjoys a much more attractive 25% tax rate. That 5% difference, that can mean massive, massive savings as your startup grows.
But of course, those tax benefits do come with some strict responsibilities. Unlike an informal proprietorship where you might just, file a simple personal income tax return and call it a day, a private company requires rigorous annual compliance. You absolutely must file regular updates with the Ministry of Corporate Affairs. You have to maintain proper balance sheets. And, this is a big one, those books must be formally audited by a chartered accountant. Plus, you've got to file a separate corporate income tax return. It definitely requires discipline. But honestly, this exact discipline is what gives the company its high credibility in the wider market.
Final section, Section 6, Self-File or Professional. This naturally brings us to the practical question on literally every new entrepreneur's mind. Can I actually do all of this myself to save some cash?
Well, the short answer is, it depends entirely on the entity you choose. If you're starting a simple proprietorship or partnership, DIY is absolutely possible. The setup steps are super minimal, often just local tax registrations and getting a bank account. You can totally navigate that paperwork without hiring help. But if you are registering a private company, an LLP, or an OPC, it's a completely different story. That 5-step MCA process we talked about earlier legally mandates that a certified professional, like a company secretary or a chartered accountant, must authorize and certify your incorporation documents. Practically speaking, you will hit a brick wall if you try to completely solo a private company registration. You absolutely need a pro on your team for this one.
So, we've walked through the different entities, the incredible protective power of limited liability, the exact registration roadmap, and the real costs involved. The path is clear, but the final decision, that's on you. So what does this all mean for your next move? Are you ready to formalize your startup and unlock serious investor funding with a private limited company? Or does a simpler, low-compliance proprietorship make more sense for where you're at right now? Consider your goals, weigh the compliance against the credibility, and take that crucial next step. Thanks so much for joining me on this explainer, and keep building.